In this presentation, we're going to record and match up a sales receipt and a deposit with the use and help of bank feeds. Here we go with Xero. Here we are in our G company dashboard. We're going to be starting off by opening up the financial statements. Accounting dropdown down to the balance sheet. Once that opens, we're going to go up top, right click on that tab up top, duplicating that tab. Back over to the first tab, we're going to be opening up the income statement, accounting dropdown, down to our income statement, the other financial statement report we open up quite often. Then we're going to go back up top, right click on that tab, and duplicate that tab. Then we're going to open up our bank reconciliation report. We're going to go back to the first tab, go to the accounting dropdown, then go on down to that reports. Then we're going to go down to the accounting section, and we want to be opening up the bank reconciliation summary. Then we'll right click on the tab up top and duplicate that tab. Back to the first one, the balance sheet, and updating the date. So I'm going to bring up the date. We're working in the month of April, so let's bring that on up to the month of April so that we have the report reflecting what we're working on. There we have that income statement. I'm just going to change the beginning date to April 1st because the ending date, we don't have anything after April, so we're okay with just changing the beginning date to April 1st, and we'll update that information. Then we'll go on over to the bank reconciliation. We're going to be working, of course, with the checking account here. That's the only bank account we have. And the date's going to go up to April as well. April 30th, we'll update that information as well. Let's go up to the first tab now, and then we're going to go to the accounting dropdown. We're finally going to make it into our bank accounts where we have some reconciling items. We're only down to the last two. We're going to take a look at those last two, so we'll open that one up to see what they have in them. Then once there, I'm going to hold down control and scroll up just a bit to get up to that 125%. Up to the 125, that's where we like to be. So now we have another deposit here. So we've got another deposit we want to consider. Let's take a look at another type of method that we might be using with regards to the deposit side of things. Let's go back to our flowchart over here. So we've got our flowchart. This is in QuickBooks Desktop. We're just looking at the flowchart for it though. We considered the full process of having an invoice and tracking the receivable. What if we basically have a store and we're just going to collect things basically in our store? We got the cash register and we're going to have sales receipts then, and we're going to take those sales receipts and then simply deposit them into the bank. If that's the case, if you have the sales receipts, there's kind of two ways that you can do it. We're imagining we're in our store, in our case, our Get Great Guitars store. People are just bringing the guitars up or doing whatever they do, and we're making sales at that point in time and collecting the cash. We can imagine cash in the check in the drawer at this point in time. Then we're going to make the deposit at the end of the day, all the cash that we receive. So there's two ways you can do this. You can create a sales receipt, and then every time you get money, you can debit, you can increase the checking account, and the other side go into sales at the point in time you make the sale. Now, and we'll show that, but there's a problem with that, and that is the fact that if you do that, like if you're imagining that you get cash all day long and you're making sales and you get cash, and you record them into the checking account as you make the sales with this form, then you can imagine you can have like 10 to 100 sales just depending on what types of things that you sell. And then when you reconcile to the bank, like when you deposit it into the bank, you're going to deposit all that cash at one lump sum. You're not going to make 100 different deposits for different cash receipts that you had. And that means that when you go to the bank, it's going to be showing on the bank statement as one lump sum. So then when you tie out your books to the bank, it's going to have 100 transactions here and one transaction there. That's not going to be easy to reconcile. So what you want to do then under that scenario is that when you're in the store, you increase sales and possibly take it into a clearing account, such as another cash account called just cash clearing account or something like that. Then you go to the bank at the end of the day and you record the deposit, transferring it from the clearing account to the checking account in the same format as the deposit that you're putting into the bank. That way, when the bank feed comes through, it'll match up to the amount that's in the deposit. It'll be really easy to do the reconciliation process. So just be aware of that. Now, we're going to say, well, what if we didn't do that? What if we just said, I'm going to create the sales receipts, and I'm going to have multiple sales receipts that are going to tie out to the deposit that we made at the end of the day? Might be possible as long as you only have a few different sales receipts. If you're selling like 100 things, and then you're going to deposit it at the end of the day, I wouldn't recommend it. You may be able to do it because you can have daily deposits and match it up, but I wouldn't recommend it. If you only have like a couple sales receipts, like you sell a couple big ticket items or something like that, and you have 2 or 3 sales in the day, and you have to match that up to the deposit, and deposits grouped together, then maybe you could just deposit those 3 sales directly into the bank. And then when it clears the bank, you can match it up to the bank feed, which will only show 1 deposit, and you can match it up to the 3 over here. If it gets any more than 3 or something like that per day, I would not do that. I would go through the clearing account possibly and make sure that you deposit it into the system in the same format it'll show up in the bank's statement, and that'll make things easier. Okay, so let's see how this would work then. Going to go back over here. We're going to say I'm going to create a sales receipt, and imagine we're back in time now. We're imagining that we're going to make the sales receipt as if someone's coming into the store, making a sale, and then we went at the end of the day and made the deposit, which then cleared the bank. And now we're going to match it out when we cleared the bank. So we're going back in time to when we made the sales receipt. So once again, I'm going to duplicate this tab. I'm going to right click on this tab and duplicate this tab. And then we can I'm going to work on the tab to the left. So we'll work on this tab. I'm going to go back up top. I'm going to hit the plus button, and we're going to say we have a receive money. So we're going to say that we're receiving money because we're imagining we're making a sale basically in our store. And it's going to be from the checking account. So I'm going to say in the checking account. And then I'm going to hold control and scroll down just a little bit. So we're at like the 110. I think it's easier to see. And then let's say we're on E now for our customer. So customer E comes in. And we'll say this happened on, it would be the current month of April, let's say 3rd. And I'm just going to put a sale here for the description. So we sold something, this time not an invoice, but into the store. And the amount, let's say it cost 1,000. The other side's going to be going to we're going to take it to merchandise sales again. And I'm not going to record sales tax. Same story here. You could record sales tax at this point in time as well. I'm not going to, and if you did, then it would increase the sales tax here and you can calculate that out. I'm not going to do it for the purposes of our practice problem. What's going to happen when we record this, it's going to deposit it into our checking account, right? It's going to go, because I had it go right into the checking account rather than putting it to a clearing account. So it's going to go into the checking account, even though we haven't, so we're not waiting, in other words, till the bank feed happens. And then we're going to have to match up what we put into the checking account on our books to what happens on the bank. So, and then the other side is going to go to sales, to revenue. So let's say add, I'm going to say add and make another one. So we're going to have 2 of these items. And so this one, I'm going to say this is to F, our customer. And once again, I'm going to say this happens in April. So I'll say April 3rd again. And I'm just going to call it a sale. And we're going to say this is for 1017.5. Because that'll tie out to our 2017 50, which is the total deposit that we have. This is going to go to merchandise sales once again. No tax, same concept. What's going to happen? It's going to increase our checking account, even though we haven't matched it to the bank feed yet. And then the other side's going to go to revenue. So we're making sales in the store. Let's go ahead and save this and see what happens. So see if I did anything wrong. Nope, it's a green thing up top. I did it right. I knew I would. It's not like I'm surprised here that I didn't do anything wrong. So I'm going to go up top, and then we're going to update the balance sheet. So I'm in the balance sheet now. What's going to happen? We're going to have those 2 deposits. So if I go into the checking account, we're going to have 2 deposits that are generated not from the bank feeds. They're on our book side of things now. So we recorded these directly into the bank, and this happened on April 3rd. So here they are. So we recorded these 2 in the system, increase in the checking account. I'm going to go back. And then on the income statement, we recorded the revenue. Here happened at the point in time that we made the sale. So if I update this, we have the merchandise revenue is going to go up. The merchandise is going to go up here. So we'll scroll back down and say that we have this increase for these 2 sales. So these are sales, not invoices this time, but the sales receipts. All right, let's go back over. And then if I go to the bank reconciliation tab, you'll note that this time these items are not on the bank statement as they are shown here. They're not on the bank statement side. They are going to be on the account transactions side. So in the account transactions side, we're going to have these items. Now we have the transaction. This is the first time this happened because we're making transactions on our books before they clear the bank with regards to cash. So here they are. We deposited these items into the bank without relying on the bank transactions, and now we need to match these items up to what happened on the bank, which would be more of a full service accounting cycle. So we're kind of more on a full service cycle here with regards to the deposits using this method. So I'm going to go back to the first tab now, and we have those 2 items to reconcile. Now, notice here, if I update this tab as we are, the thing is that those two deposits add up to that 2,047.50. And is Xero finding that? Can Xero find it? No, it can't find it because there's 2 deposits. It couldn't figure it out. So this isn't matching it up automatically for us. So that means that in this case then, if we're making deposits into our accounting system in a format different than the way they'll show up on the bank, then we're going to have to go in here, and every time we have a deposit, we're going to have to say, okay, now I have to match it out to the deposits I made on my books in some way that works. So again, you want to kind of avoid that unless it's very simple to do that, and you avoid it by basically using that clearing account. So in this case, we're going to say it's not too bad. I only got 2 of them that should tie out. So I'm going to open this up. There's the 2 accounts. I'm going to say those are the ones. If I add those 2 up, then those are going to tie out. Again, note, you can imagine here if you had 50 of these down here and you're trying to, check these off to tie out to this amount. It's not worth your time. It would be easier to set up a better system so that your system matches to what's on the bank statement. But if you only have a few different deposits, then this isn't too bad of a process to do. So once done, we can then say, okay, there they are. We matched them out. Actually, they're not matching out here because this is 1017. They need to be this one. I'm going to change this. So it's not matching out exactly. So I'm going to undo this. I'm going to undo this, and I'm going to adjust one of our invoices. So to do that, I'm going to go back to the income statement, and then I'm going to go into the merchandise. I'm going to find that invoice and adjust it so the invoice is in there for the wrong amount. So then, and it's actually not an invoice. This is the sales receipt. So we have a sales receipt in there for the wrong amount. I'm going to adjust this one to the proper amount so it'll match out in our practice problem. So I'm going to match this up. Going to open that one up. I'm going to go to the options up top, and I'm going to edit this one. So I'm going to edit the transaction, and I think to match this up, this one needs to be, let's see, 1047.5. I'm not sure where I got that other number from. So then I'm going to update this, and now those two deposits that we made should tie out to what is on the on the bank statement. So if I go back over here and I refresh this screen, I'm going to say, all right, let's refresh this. And then I scroll back down and let's see if it works now. Okay, so again, we got that 2047. I'm going to find a match and see if we could find the match. And they have to match out basically exactly. I mean, they should match out or else something went wrong. And then we tied them out, and now it's giving me that basically okay, and it's saying, hey, yeah, those two match out. So now when we record this, note this is different than when we had the invoice. This is different than an invoice because we already entered the deposit. We entered the deposit as like a sales receipt, as a transaction that happened in the same time. So this is like a matching system, which is saying it is matching, but it's not matching to an invoice. It's not recording any transaction. It's saying you've actually made two deposits that match up to this one. So no new transaction is going to happen here. It's already been recorded. We're just matching up this deposit to what's already been recorded in the books. So I'm going to say okay. And so there we have that. Let's see what happens if we go on up to the balance sheet and I refresh the balance sheet. No new transaction is going to happen here. So all we did was match it up. So if I go back into the checking account, it's not going to add anything new. We're still going to have those two transactions that took place that we just simply matched out to that one deposit. So if we go down here and look at our detail, we're going to see in April, we've got these two received monies. So the two received monies are still there. We don't see any amount for that $2,047.50, which was the amount that shows up on the bank statement because nothing new happened. We're not going to duplicate the deposit. All we said when we matched it up was saying, hey, we already have that recorded. It's already done and we matched it out. Nothing new is going on here. So if I go back, the same thing would be true for the income statement. Nothing new is going to happen. The income statement, is where it is. If I go then to the bank reconciliation report and I refresh the bank reconciliation report, then this 184,595 should be the same as the 186,643. So let's go ahead and do that. So I'm going to say update. And this one will disappear. So there's the 186,643, and now we're down to just one outstanding transaction. Then if I go to the bank reconciliation and we have one outstanding transaction. The bank statement, then, if I go to the data on the bank statement side of things, we're going to see the bank statement side of things having that 2047 in it. So the 2047 is here. It's now reconciled. It's reconciled to the book side of things, which has 2 transactions that add up to that 2047, and that would be the 1047 and the 1000 here, both having been reconciled. So these 2 were already on the books. They were unreconciled before. Now we reconciled them out, these 2 items, to the one deposit that happened on the bank statement side of things. So that's it for now. Let's get out of here.